Welcome to the Window Wisdom Podcast, your guide to replacement windows and more.
Hi, I'm Ted Kirk, your host, and this is episode number 22. On this podcast, we're going to be discussing the benefits of financing your window and door projects. So today we're joined by Dave Anderson. Dave is the Senior Vice President of Regional Sales with Service Finance Company. So Dave's here to talk to us a little bit about financing, maybe give us some helpful tips. Welcome to the podcast, Dave.
Thank you, Ted. Happy to be here.
Well, Dave, tell us a little bit about Service Finance for those who aren't familiar with Service Finance Company. What is it you guys do? What kind of financing do you specialize in?
We're a dedicated home improvement finance company, and we specialize in creating loan programs that are somewhat unique to the industry that help consumers buy and get the projects completed that they're looking to have done.
Well, that's certainly helpful. When somebody is starting this process, how do they start looking into finance? How does that play a part with the budget, when they're considering a project?
It's a great question. There are different types of loan products out in the marketplace, depending on the customer's financial situation and how they want to handle this purchase. Finance programs fall into two basic categories. The no interest category for people that are just looking to use somebody else's money for a specified period of time. And then what I call the low rate, low payment category. Obviously a low rate to keep the finance cost of the transaction at a minimal, but also a low payment that helps it fit into their monthly budget and provides them the flexibility to make a minimum payment or pay more as they can.
And I would assume that, they could pay that off anytime, no prepayment penalties there?
Yeah, all of our loans are simple interest, no prepayment penalty loans, which make it very attractive for the homeowner. Absolutely.
Well, one of the things that, we try to do here is offer customers these flexible payment options, and your programs have worked very well for our homeowners. And, just like to talk about some of the advantages of using a flexible payment option from a financial standpoint versus maybe draining your savings. From our standpoint, we like it because people generally buy better products. They usually do a little bit more of the project, instead of having to settle for maybe an inferior product. What kind of things do you see out there that would be helpful for the homeowner in using the financial products?
It's a great point that you bring up, Ted. When we look at home improvement products and projects, they come in all shapes and forms. And like any product, you have the entry-level product and you have premium products. And many times consumers and homeowners are looking those purely at the price point. But when we look at it over finance terms, it's very little difference usually in the monthly payment, which allows homeowners to, instead of looking at their project based off how much they've allocated today, they then realize that with a little bit more per month, they're able to get the premium product, which long-term, they're usually happier with, and they get a greater resale value on their home as well.
That's a great point. The trend now is going bigger and bolder. And, for example, we're selling bifold doors made by Infinity from Marvin. And, the doors are spectacular. They really enhance the home. They make indoor, outdoor space, bringing that together, just tremendous. But, they're an investment in your home. And when you make that investment, you're not looking to make a quick, cheap purchase. You're looking for something that's going to be there and operate great for long term. We see this, using these financial products as a means of being able to do these bigger projects. So now you don't have to just think about replacement. Now you can think about, how can I use some of these spectacular products to remodel my home? You just open up a whole nother level of products and services to the homeowners.
Yes, absolutely. And with some of the loan products that are out there now with interest rates on an unsecured loan in the low single digit rate, many times we find consumers and homeowners are finding it's more advantageous to use someone else's money for their project and leave their capital in their investments for them. If we look back over the last 10 years, we've seen the stock market triple in value. And when you look at it in those terms, instead of spending their money that's working for them, they're able to take advantage of these low rates and these low monthly payments. And to your point, instead of looking at a simple replacement, when you see some of the new options that are out there, it's amazing how much, good example you brought up is the bifold doors, how it now opens up and combines that indoor-outdoor space and makes it one big fluid area. Ultimately, what we generally find is that consumers are much happier with their decisions when they remove the constraints over a budget and realize that, with today's low rates and a lot of the no interest promotions that are available, many times they say, hey, I can have what I need, and it's only just a little bit more than I had initially planned on spending.
Yeah, and that's a great point. Thank you for sharing that. Can you tell us a little bit more about, Service Finance's no interest plan option? How does that work? And I know I just want you to share a little bit with the homeowners that may be listening, because you guys do things a little bit different than what we typically find in the marketplace.
Well, you bring up an excellent point. We absolutely do, Ted. And the reason we do that is we want our loans to be the most consumer-friendly loan products in the marketplace. A vast majority of consumer goods that are financed on a deferred interest type promo. And it doesn't matter whether it's, furniture or jewelry or, even automotive repairs. A lot of places provide finance options for their customers, but most of them are on a deferred interest, means interest accrues, usually with a minimum monthly payment. We provide those loan programs, but one of the specialties that we provide is what we like to refer to as a true no interest, no payment. And there are other lending sources out there that provide what they say is a no interest, no payment. But I think the magical question that consumers need to be aware of is, does interest accrue during the promo period? Because if it says it accrues or it's deferred, that means there's a catch at the end of the promo. To take benefit of the no interest aspect, consumers would have to pay off that loan in full and carry a zero balance beyond the promo period. Service Finance, we do it a little bit differently. We do not accrue interest on our no interest, no payment promotion until the very end of the promo. So for example, let's say a customer does a project and they decide to upgrade their project and they spend a little bit more money on it. The neat thing is they have no interest accruing during the promo period. As long as they pay it off, then they just paid the cash price. But the beauty is, should they find that they want to take a little bit more time, interest only begins to accrue after the promo has expired, and it only accrues on any portion of the loan that is still outstanding. So it gives them the ability of truly using, our money for free during that whole promo period. It's a very unique program in the marketplace and offers a lot of advantages and flexibilities to homeowners.
Wow, that's unheard of. And plus you pair that with a no payment option. I think a lot of times people fall in this trap where they're late on a payment or they miss a payment, and then the next thing they know, they get this surprise bill with all this interest. So it sounds like that's not something you got to worry about with your programs.
You're absolutely right. Because there are no payments on these type promos, then the customer is able to use our money for free during the promo period. They can leave their money where it currently sits, so they're not having to close out of an investment or an investment vehicle, if you will. And sometimes, those have costs associated with them. So it allows them to take advantage of specials that are being run right now. It allows them to go ahead and improve their home today, get the benefit of that improvement, and then it gives them the flexibility to pay at their convenience over that promo period.
And Dave, let me ask you, is there any other pitfalls to watch out for, when looking at a finance company or plan, or any hidden fees, application fees, anything that homeowners should really be aware of when they're making this application?
Yes, depending on the lender, you could have actually all of those and some others. So some lenders do charge what they call activation fees, which is like an application fee that gets charged to the loan. Usually they're nominal amount, but it's the principle that seems to upset many homeowners, particularly if they're applying on a no interest type promo. They're believing they're not paying anything, and any type of fee that a lender puts on a loan is like prepaid interest in most cases. So we do see activation fees. Some loans, they actually charge an origination fee, which is a percentage of the loan amount, which is added to the transaction. So, it's very important to be asking when you're shopping around with contractors what type of finance sources and payment options they're providing, and ask the contractor specifically, are there any activation fees, application fees, or origination fees? Service finance, we don't charge any of those because we want a very simple, consumer-friendly loan that's very straightforward. But they're very common in the marketplace that consumers should make sure that they're inquiring about before they decide to move forward.
Sure.
Now, there's one more thing, Ted, is that it's also kind of important, the contractor's process, because some contractors like to shop loans around, which means if they take an application and they send it to 1, 2, 3, or 4 lenders, then that consumer ends up with multiple credit inquiries on their credit bureau. And, a lot of homeowners like to take pride in their credit scores. And certain circumstances, multiple inquiries can bring down that consumer's overall FICO score.
Wow, that's some great information. So glad you shared that with us. And we know interest rates are competitive right now. We're in probably unprecedented times. A lot of people are refinancing their homes. I think it makes a lot of sense, like what you said. If they could combine that with a no interest, no payment, no accruing interest program from Service Financial, then that gives them time to access that capital and not having to worry about paying that off and being under such a time constraint. But if somebody wants to apply for financing with Service Finance Company, what does that process look like? How long should we expect that to take? Can you share some information along those lines? You talked about credit. Do you guys pull certain credit bureaus looking for certain credit scores? Can you just kind of speak to the process a little bit?
Yes. At Service Finance, most things are done in a digital format. We have the ability through our mobile technology for the salesperson or consultant to scan the barcode on the back of a consumer's driver's license, which does nothing more than pre-populate the information from the driver's license, the applicant's name, address, date of birth. Yeah, it makes it very simple and quick for a consumer. There is a couple of pieces of information that would need to be collected. There's about 5 fields that the salesperson would ask of the consumer. Click submit, and you get an answer within seconds. It's almost instantaneous, leveraging today's modern technology. The neat thing is the consumer can view the documents electronically. They answer 4 questions and sign the documents electronically. If they prefer, they could be signed on what we call paper documents as well. But the whole process is generally completed in just a few minutes. Because these are unsecured loans, simple interest with no prepayment penalties, the process is very fast, very quick, and ultimately the important part is very convenient for the homeowner.
So it sounds like you have all the documents and everything controlled in an electronic format. So there's really nothing beyond that would require papers and signatures. Is that correct, what I'm hearing?
You're absolutely right. We call it a paperless process. We don't require the applicants to supply any documentation of their own, which makes it nice. It's completely paperless. It's very quick. It's very convenient. And that provides the flexibility for a homeowner to look at the project that they're looking to get done and to get it handled very quickly.
And if somebody did get set up with this, when would their first payment be due? How do they make payments on your program?
And that's another interesting question, because depending on the lending source, some lenders charge payments to the homeowner during the construction phase, in terms on how they're set up with the contractor. With Service Finance, no interest is billed on a consumer project until after project completion. And consumers don't make payments on their loans until approximately 30 to 45 days after completion, at the very earliest.
Wow. Well, that's spectacular. Dave, you've shared a lot of great information with us. Really appreciate you being on the podcast. Is there any additional information or advice that you had for homeowners regarding finance, or any information you'd like to share about Service Finance Company before we end the podcast?
Well, I'd just like to say, as some of the points we covered, always ensure that you're applying with a loan that does not have any type of prepayment penalty, any activation fees, or application fees or origination fees associated with it. And if you are looking to take advantage of some form of no interest, no payment promotion, just double check to ensure that there is no terminology that says interest accrues or that the interest is deferred. And that way you as the consumer would be assured of getting a true no interest, no payment type promotion. We at Service Finance are happy to take care of customer projects and financing needs, and would look forward to servicing any consumer who's looking to get a project through a qualified embedded contractor.
Well, thank you for that, Dave. We appreciate you being on the podcast, and hope to have you back sometime.
Thank you for your time, Ted.
Well, that's a wrap for episode 22. We also appreciate all of our listeners as well. And if you'd like the content that you've heard, please give us a positive rating and share with someone you know.